Hello, everyone. Right now on Binance, the world's largest crypto exchange by volume, Bitcoin is trading around below 115,000. On Coinbase, the same Bitcoin is quoting near below 119,000 at the same moment. Same asset, so why the gap? Traders call this an exchange premium. In plain English, the identical coin trades at different prices on different venues. Some investors have tried to profit from that gap. Today we'll look at what that premium really is and whether retail traders can actually capture it. On the Binance daily chart in front of you, the premium formula is simple: US venue price minus global reference price divided by global reference price times 100%. Think of it like measuring how much more a corner store item costs versus Costco, but in percentage terms.
콘크리트 이그젬플, 바이낸스 비트코인 $11만 5천, 코인베이스 $11만 9천, 프리미엄 $11만 9천 마이너스 $11만 5천, 나누기 사인 $11만 5천 곱하기 사인 100% 근사 플러스 3.5%.
A positive number means the US venue is trading richer. A negative number, say minus 2%, means the US price is actually cheaper than the global average. Traders call that a negative premium or discount. Historically, roughly minus 2% to plus 3% has been a normal band, mostly exchange fees, settlement timing, and liquidity differences.
어버브 플러스 10% 오픈 시그널즈 오버히티드 US 디맨드.
Check the chart yourself right now. If the live premium sits inside that normal band, the market is relatively balanced. First driver, supply and demand. On the Coinbase daily chart, US retail money, ETF, related flows, and institutional custody demand pile onto one platform. Binance spreads global order flow across Asia, Europe, and the Americas, like a packed Manhattan Starbucks versus a wide-open suburban location. Second driver, friction walls. Moving dollars in and out of US exchanges is not instant. ACH takes days, wires have cutoffs, and state-level licensing can block accounts. It's a bit like store credit that only works at that chain. Your capital can get stuck on one venue while the gap moves. Third driver, media psychology. When CNBC or crypto Twitter runs, Bitcoin breaks out headlines. Cash on the sidelines rushes in with FOMO. Am I too late? That buying pressure pushes the US price even higher in a feedback loop, the same way euphoria can lift the Nasdaq when the Fed is easing and risk appetite is hot. Those three forces repeat. In late 2017 and again in early 2021, US premium spiked well above plus 10% during mania phases. But plus 10% does not always trigger an immediate crash. Sometimes the premium lingers for days or bleeds off slowly. Never trade on the premium alone. Cross-check resistance levels and volume on the chart. On paper, it looks beautiful.
바이 비트코인 온 바이낸스 $11만 5천, 셀 온 코인베이스 $11만 9천, $4천 오브 에지.
Like sourcing cheap inventory wholesale and flipping it retail. Reality wall number 1. Regulation and compliance. U.S. exchanges enforce strict KYC, withdrawal limits, and state restrictions. Moving size across venues is not as simple as clicking transfer. Wall number 2. Time. Even when transfers are allowed, bank wires and blockchain confirmations can take 1 to 5 business days. By then, the premium often shrinks, the same way an S&P 500 gap trade dies if you cannot fill until the next session. Wall number 3. Fees.
워크 스루 더 매스. $11만 5천 바이 온 바이낸스 0.1% 피. 그러면 $11만 5,115. 네트워크 트랜스퍼 피에서 $30 그러면 $11만 5,085. 셀온 코인베이스에 $11만 9천 니드 A 0.6% 테이커 피 그러면 어바웃 $11만 8,286.
Gross spread was below 4,000. Net profit might land near below 3,200, and that is before slippage, spread widening, or a price move against you. Fees and friction can eat a huge slice of the theoretical edge. Bottom line for U.S. retail. Arbitrage faces a triple barrier of rules, time, and cost. Treat the premium as a market thermometer, not a guaranteed paycheck. On the Binance Perpetual Futures chart on screen, institutional players often run the opposite playbook. If U.S. spot is overheated, lean short on global futures. Like a bus driver clearing luggage space before a tourist rush hits. The structure. 1. Borrow and sell Bitcoin on Binance Futures, short. 2. Wait while U.S. buyers bid spot higher. 3. Close the position when the gap compresses. Retail reacts to headlines. Desks read positioning data and funding rates systematically. A key gauge is the funding rate. On perpetual futures, when longs dominate, they pay shorts every 8 hours, often cited around 0.01% to 0.05% per interval in hot markets. Historically, when funding persistently runs above roughly 0.02% per 8-hour window, a pullback within 1 to 3 days has been observed often enough to matter, but exceptions abound. Sometimes elevated funding persists and price keeps grinding higher. So when you watch funding, pair it with chart resistance and volume profile. Never make a trade decision on funding alone. Using the Ethereum daily chart on screen as a second reference, here is how to interpret premium ranges.
-2% to +3%, normal zone.
Mostly fee differentials and time zone liquidity. The market is roughly in balance.
+3% to +10%, US after미점 is building.
Opportunity can exist, but correction risk rises. Check resistance on the chart.
+10% to +25%, warning zone.
U.S. buyers are crowding exchanges into overbought territory, like a coffee shop with a line out the door and no seats left. Plus 25% to and above, historically treated as pre-bubble territory. In prior cycles, think late 2017 and early 2021 mania windows, readings at this level often preceded sharp drawdowns, though some episodes lingered for weeks before fading. Again, never decide on premium alone. Confirm with volume and trend. With the Coinbase Daily still on screen, the premium is best thought of as a thermometer for U.S. crypto sentiment. Higher readings suggest overheating, lower readings suggest calmer conditions. Use it to spot correction risk early. Practical tip: when the premium pushes past plus 10%, mute the hype headlines and focus on chart signals, resistance, volume, trend. Let it be a psychological shield against impulse buying. Cross-exchange arbitrage is not a realistic retail strategy once you account for U.S. rules, settlement delays, and fees. Treat the premium as an observation and learning tool, not a money-printing machine. Key lesson: institutions can monetize these gaps because they have capital scale, low-latency infrastructure, and regulatory access retail lacks. We learn from the evening news. They were already positioned. Final reminder: this lesson is educational only. Every trade's profit or loss is entirely your responsibility. Exchange rules, tax treatment, and federal guidance can change without warning. Always check the latest SEC, CFTC, and exchange announcements before acting. Thank you.